You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
I'm chatting with Chris Vermeulen. His website is thegoldandOilguy.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Well, taking a look at the gold charts, gold below $1,300 an ounce for the first time in 5 months. Is this a big dump of gold?
This is a big dump of gold. This move I've been talking about with subscribers over the last couple of weeks, where gold's had this big rally from May, the low in May, rallied all the way up into July, and we've been seeing it trade sideways, kind of forming this big bull flag or this kind of consolidation period. And it really hasn't had a three-wave correction, which is where it has a kind of a zigzag to the downside with two minor new lows. And because it hasn't done that, it really hasn't cleansed the market of everybody who's been accumulating for the last 3 months, trading in this sideways range. I talked about it yesterday, pretty specifically with another trading friend, and talking about how today or yesterday was pretty much going to be the start of a sell-off in both stocks and gold, silver, and miners. We'd probably see some type of flush out, and that's exactly what happened today, almost right to the day. And that's what we're seeing some short-term critical support zones being broken. All these people have been accumulating gold for the last 3 months, and silver and miners, all those, they're all more or less the same trade. They're all now panicking out of the market, dumping their shares, and it's cleansing the market. This is what you actually need before the next leg to the upside can start. And I think we might see a couple more days of it grinding, trading down at this lower level, but we should probably have like a V-shaped recovery where, come straight down here for possibly a couple more days and then have a knee-jerk reaction straight back up, get back above that 1,300 mark, and then just keep on running higher after that. But it has to get rid of all these people who just keep buying gold and sitting on it and accumulating, waiting for this next breakout to the upside. It's got to disappoint. It's got to scare them out of the market. And we're seeing that today. Gold down almost 3%, or it is 3% right now. Silver is down 5.2%. And miners are down. It almost touched the 10% mark. The GDXJ, the juniors, down today. And really, everything is now getting down to some critical support zones. This is the kind of panic we need. And on the juniors in ETF, the GDXJ, if you were to draw Fibonacci extensions to where the downside target is, it's actually it's trading right at that level right now, 39.35, which is right where it's trading, and potentially all the way down to the 38.23, so almost another 75 cents lower, which isn't a whole lot in the grand scheme of things. So this one-day panic is enough for the markets to drop and hit their downside targets that we should technically see a V-shaped recovery, a knee-jerk reaction back up from these levels looking forward possibly a week and a half from now. It'll just look like a quick panic blip on the chart, and we'll be back to higher prices.
Are the gold vultures circling right now, taking a look for some bodies to peck at?
They are, for sure. Actually, my inbox has been rolling in with emails. Can we buy GDX? Can we buy some gold stocks? This is panic. Everybody, all my followers realize that when we have these big days of panic and these short-term pivot lows have been breached, these are the times when it's, we're getting ready to accumulate. So, yes, people, the non-emotional traders are looking at today's price action and the lows we're at right now as like tasty entry points to maybe start to scale in over the next 3 days or so for a potential knee-jerk reaction back up and to catch this nice pivot low before we see potentially much, much higher prices. So I like these prices. It looks really good, especially on the juniors, the GDXJ. They're kind of reaching measured moves right to into the zone today. So I would like to see what happens tomorrow. There's enough panic selling in the market today that we'll probably see the mass market participants tonight. They'll come home from work, they'll turn on the news, they'll read the newspaper, and they'll go, wow, what just happened? I got to call my broker. I need to log in. I need to set my orders to exit my trades tomorrow morning. I don't want to be in gold or silver or miners. And so that will trigger probably a gap down tomorrow that with any luck, that'll be like I call it like usually to the upside I call it a pop and drop, but this is like a gap and go. So it gaps down because everybody forces it down by putting their orders in tonight and pre-market tomorrow. It gaps down and then it just goes, meaning it takes off to the upside. So everybody gets out of the worst possible time. If you've traded or if anybody traded, there's a lot of times in there when you're emotional. You buy at the high and you end up selling at the low, and you couldn't pick the worst timing. So that, I think, is about to happen to the majority of people tomorrow morning or over the next 2 or 3 days. They're going to get out at the worst possible time and be kicking themselves a week from now.
Why do people do that?
You know what? All the market is group together everybody's emotional levels and their perceived value of things. It's a emotional gauge, and it's just the way it works. The market just happens to move to the exact opposite as the masses, what they're feeling and what they're doing. So I focus a lot of my analysis on mostly market sentiment. So I'll use some cycles. But I use extreme deviations of moves. So if something moves 1.5 or 2% deviation away from the mean, usually that's entering the extreme level. I follow the NYSE up and down volume ratios because that shows me what the big players, mutual fund players and investors are doing, whether they're piling in or getting the heck out. And when I see those ratios spike, that is my market sentiment tool where I go, okay, everybody is panicking, and this is a time when we should be looking to get in. Once a support zone or a measured move target to the downside has been tagged with price, we want to jump in because that's when you get a knee-jerk reaction back up. So the market is nothing. All it is accumulated emotions. It's the emotional mindset of the average market participant grouped together and the value they put on things. And you have to follow that. You have to understand what they're doing. And the key is to buy when everybody's more or less crying and to sell when everybody's excited and saying, this is so easy. It's, and you need little tools depending on your time frame. If you're a swing trader, a day trader, or long-term investor, you've got different sentiment tools that you'd want to use. And they do lag usually a little bit when you get into long-term investing. They lag quite a bit. But on a short-term basis, intraday, we can spot intraday highs and lows, reversal points in the market by using these real-time sentiment indicators with volume ratios and things like that.
Chris, I believe you're one of the people who told me this is exactly what was going to happen, is that we would have this particular kind of action in gold at this time of the year, and that all the experienced traders were just sitting back waiting for it to happen.
Yeah, I think we talked about that in our last talk. We really need the market to cleanse itself and wash out, and that's exactly what we're seeing. And things take a long time to play out. I think it was about 2 weeks ago we talked about it, and we need the market to have this shakeout, and here it is. So yeah, it's just the way it goes. The hard part with trading and investing is the market moves slowly. People like to be active. They want trades left, right, and center. But unfortunately, swing trades, they take a month or so to unfold at times, and when the pattern fails, you got to wait for a new setup. So it's a painfully slow game if you're a swing trader, and it ends up making you searching for trades. And when you're looking for setups, that's typically when you keep jumping in the wrong ones because your brain is looking for something and it finds something that's not really there, versus sitting back and glancing at the charts and being, wow, okay, that looks really good. It's a big difference from stumbling across or watching the market evolve into a pattern that you've been expecting versus just jumping into any type of stock looking for a pattern.
We'll have more with Chris Vermeulen right after the break.
GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond, recently discovered in Africa by a fellow Canadian junior, with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Chris Vermeulen. Oil prices keep hanging around $48. They'll go down a little bit. Down. They broke, 50 a few weeks ago. But do you think that we've seen about the best of the prices we're going to get for this time of year?
It's really tough because commodities as a whole, more specifically like precious metals, oil, natural gas, they're all forming very bullish long-term patterns. And we could easily see crude oil trade sideways here between $52 a barrel and $40 a barrel. We could see it drift around there for still several more months. It is at the upper end of its range, trading here at $49. It might etch its way a little bit higher. A lot of the whole commodity play, I think, is really hinged on the U.S. dollar index. The U.S. dollar index at this point has got more of a bearish tone to it, a bearish pattern. And if it does break to the downside, then we're going to see commodities across the board start to rally, and commodities are going to start a pretty major bull market. And that's what the charts are showing for precious metal, natural gas, and crude oil. So I think there's a lot of upside potential in commodities looking forward 12 months from now. It's just we're still in this limbo here, this major basing formations that take sometimes years to unfold. And of course, crude oil has been forming a basing pattern. You could argue here a basing pattern since September of 2015. So we're talking about a year, a large cup and handle formation that also had a double bottom, and it looks very bullish, but it could continue in this handle, the sideways movement, for several more months. But when it does break out, we're going to probably see a significant rally in crude oil, and I think that's going to come right back down to the U.S. dollar breaking down and starting to collapse.
Will OPEC actually, at its next meeting in November, reduce production?
Yeah, I don't know what they're going to do. I have no idea what they're going to do. That'll just be something we listen to and watch for, and go from there. If they do, that'll be very bullish for crude oil, and especially if we see the U.S. dollar start to break down. At this point, though, crude oil, to me, I'm not looking to trade it because it's near the upper end of its range. I don't see any real reason to trade it at this point. If there's some big news and we have some major breakouts, I'll be looking to get involved. But to me, the more imminent play is kind of more the natural gas play when it comes to energies, because it's formed a major basing pattern pretty much since January of 2015. So well over a year. We're going on a year and 3/4 here. And it's looking like it's about to have a major pop and rally and extend. And of course, Farmer's Almanac is talking about we're supposed to have an extremely cold winter. That bodes extremely well for natural gas. Last time we had a major cold winter, we saw natural gas in 2014 explode. It went from more or less, where did it go from? About 350 and rocketed up to almost, I think it did tag 650. So you're talking huge potential move when there's cold weather and issues that could arise. And that's, we've been so underpriced here for natural gas for quite a few years. This basing pattern is formed, cold weather coming. It looks like the perfect storm for natural gas to warm up and take off.
How is that big field in Pennsylvania working out? I know last year they reversed the pipelines that the gas that was produced in the west and went east, they started to produce all that gas in the east, and they were sending it west. What direction are the pipelines going this fall?
Yeah, to be honest, I'm not sure. I don't follow that. I haven't really heard much about it. I don't do a lot of research on what's going on with the pipelines and gas. I follow more strictly the price action itself. So I know natural gas is being given away in all kinds of areas, lots of oil wells just giving the stuff away. And really, natural gas is being sold at more or less like the cost just to package it up and deliver it. It's once it starts to have value and there's big demand, we're going to see it jump right back up into the high fours, potentially fives again this winter. I think we could see a huge jump to the 450 mark fairly quickly once, potentially a first big snowstorm comes across the United States. I think that will spark investors and give them confidence that the Farmer's Almanac is, if we get an early snowstorm, that's going to trigger investors to start piling in, locking in natural gas rates, and that'll drive up the price.
Any reaction to Vancouver Mayor Gregor Robertson's plan to ban natural gas in the city eventually?
I think it's ridiculous. To me, I don't know. That to me is just ridiculous because natural gas is such an efficient means of energy and clean burning, and it doesn't make any sense to me. If we were to take a look, at the seasonal going towards the stock market in general, because we're getting into cooler times, and seasonality for the SP 500 shows that this is typically a time we see the market start to fall. And so getting away from natural gas, which typically moves in the opposite direction of the SP 500 during extreme market sentiment times, meaning SP 500 falls, natural gas goes up. This also bodes really well for natural gas, but if we look at a 37-year seasonal chart of the SP 500, October is typically a pretty poor month. Same with September for the SP 500. The SP 500 closed lower on September, which is the norm, and for October, we typically have a big sell-off in October also, and I feel as though we're just starting another leg down in the SP 500, and today we're seeing stocks down in general, and we're seeing natural gas have a nice little pop here, and so I think going forward here, natural gas is looking pretty ripe for a nice long play, and the equities market is looking very weak and rolling over and should be under pressure for most of October.
I see the London FTSE 100 index is at a record high. Is that an indication that perhaps the stock market in Britain has peaked out?
You know what? I haven't really looked at that, to be honest. I'm not sure. I haven't looked at that chart. I don't really go overseas and take a look at those too much. I kind of follow the DAX a little bit, but I can't really comment on that.
Should people be taking a look then at natural gas stocks?
It's kind of a tough play because energy, if the stock market sells off, energy stocks are going to get pulled down. Natural gas stocks would obviously perform fairly well, outperform the rest of stocks in general if natural gas starts to take off. But there's some other plays, like we've got ETFs that just kind of copy the natural gas. They kind of have, they do have contango, very similar to the VIX ETFs, meaning over time, if natural gas just trades sideways or even slightly moves up in your favor, these ETFs tend to lose value. So you do need to be really timely with the ETFs. But I think natural gas has got some really good upside potential. Options might be a good play. But the ETFs, I just like following the price of natural gas at this point. Unless you know of individual natural gas stocks that somebody follows already and they're a high beta, they move 2 or 3 times what natural gas does, those could be great plays. I think they could be explosive plays. But the easier play is to simply get long natural gas with an ETF, preferably not a leveraged one, because leveraged ones lose value faster if the price doesn't move in your favor. So something like UNG would be a better play in hopes that we see an explosive move here over the next month or two as we get into cooler season.
And then, of course, with Vancouver's mayor wanting to get rid of natural gas, he's ignoring the fact that perhaps he doesn't know. BC has 200 years of proven natural gas reserves. And as you said, it's clean, it's efficient, and it's very affordable to heat your house electrically in Vancouver. I did that 1 year, and the bill was nuts.
Oh, it's ridiculous. It's such a stupid idea. That's all it is. Maybe he's just trying to get exposure. It doesn't make him look too sharp. Everyone loves to use natural gas. It's just so simple to run, simple to maintain furnaces. It's efficient. It's cost effective. It's all around. It's as good as it pretty much gets. So for somebody to want to ban that, there's no way that would ever pass. I can't see anybody. If people approve that and it happens, some people need to be taken out to the woodshed and beaten.
I'm sure the mayor will be happy to hear that.
Oh, yeah.
Chris, thank you so much for chatting with us.
Hey, always a pleasure, Jim.
My guest has been Chris Vermeulen. His website, thegoldandoilguy.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.